Welcome to the deep dive. Today, we're tackling this common idea, this belief that you need a whole lot of money to start investing for income.
Right, like you need thousands saved up.
Exactly. But what if I told you, maybe even with just, say, $500, you could actually begin building a real income stream?
It's a powerful thought, isn't it? So many people assume, that meaningful investing means big bucks. But our deep dive today, it's really all about showing you how that $500 can be, well, a really potent starting point.
Okay.
We're going to look specifically at real estate investment trusts, REITs. The mission here is to sort of unpack how even a smaller investment gets you going with reliable dividend stocks.
And it really does show the power of, well, knowing where to look, right? I mean, think about it. The S&P 500 index, the big one, gives you maybe a 1.2% yield right now.
Yeah.
Pretty low.
Yeah, very modest.
But we found investments, like you said, REITs, offering way more. The average REIT yields around, what, 4.1%?
That's about right, yeah, 4.1%. And that's a huge difference right off the bat. It just opens up different possibilities for generating income.
Absolutely.
And what's really interesting, I think, is how we can tailor this whole approach, depending on how you like to invest.
Ah, okay, so different styles.
Exactly. We're going to explore two sort of distinct paths today. First, for the investor who puts safety first, prioritizing stability, predictable income.
The cautious approach. Makes sense.
And then, for those of you who may be willing to take on a little more risk, we'll look at options focused more on rapid dividend growth, aiming for bigger long-term potential.
Got it. Safety versus growth potential. Okay, let's unpack the first one then. The safety first option. Realty Income. Ticker is O.
Yep, Realty Income O. This is a really prime candidate if safety is your priority. It's offering a pretty attractive dividend yield right now, around 5.6%.
5.6%. Or I saw 5.49% at some data. Close enough, though. That's solid.
Yeah, it fluctuates a bit day to day, but it's definitely up there. And for the conservative investor, Realty Income's big appeal is its incredible dividend history. It's not just the yield number.
It's the track record.
Exactly. It's the reliability. This REIT has like a 3-decade streak of annual dividend increases.
30 years of raises.
Yeah. And get this, within that, they've raised the dividend every single quarter for 110 consecutive quarters.
Wow, 110 quarters straight. That's amazing consistency.
It really tells you something about the underlying business, right? How stable it is.
And doesn't it pay monthly too? That's unusual.
It does. That's the other really appealing thing. They pay monthly. So if you're trying to build passive income, something that feels, almost like a paycheck replacement.
With raises built in quarterly.
Exactly. With those regular quarterly raises, it's about as close as you can get on Wall Street to that kind of predictable income stream.
Okay, so consistent dividends, monthly payments. What's the business itself like? What do they own?
Well, Realty Income is huge, and it's diversified. It's actually the largest net lease REIT out there.
Net lease. Remind me what that means again.
Sure. So net lease means the tenant, the company renting the building, pays for most of the property expenses. Things like taxes, insurance, maintenance.
Ah, okay. So that makes Realty Income's cash flow more predictable.
Exactly. Very stable income stream for them. They own over 15,600 properties. It's a massive portfolio.
15,000. Wow. What kind of properties?
Primarily retail assets, like drugstores, convenience stores, dollar stores, stuff that's generally pretty easy to buy, sell, or, release if a tenant leaves.
Okay.
But they also have industrial properties and even some unique stuff like vineyards and casinos, one-off assets.
Vineyards. Okay, that is unique. And are they just in the U.S.?
Nope, they've got geographic diversification too. They invest in both North America and Europe as well.
So diversified by property type and geography. Seems pretty spread out. What's the scale like? Market cap?
It's a giant. Market cap is hovering around, say, $50 billion, maybe $52 billion, depending on the day. It's definitely a behemoth.
A real heavyweight. So it sounds like the slow and steady tortoise of the REIT world.
That's a good way to put it, slow and steady. But, sometimes boring can be really attractive, right?
Yeah.
Especially when it comes with that 5.6% dividend yield.
Good point. Boring income is still income. So practically speaking, if someone puts in $500 today, what does that get them? The price is around $57, right?
Yeah, around $57.09 last I checked. So $500 would get you, let's see, roughly 8 shares, enough to get started participate in those monthly dividends.
Okay, 8 shares of Realty Income, a solid, stable starting point. Now, let's switch gears. What about the investor looking more for growth?
Right. The second path, this is for someone who might favor dividend growth over the absolute highest starting yield, though the yield here is still pretty good.
Yeah.
We're looking at Rexford Industrial, ticker REXR.
REXR. Rexford Industrial. And its yield is?
It's around 4.6%, maybe 4.53% based on recent data. Still nicely above the REIT average, actually. And what's interesting is that this yield is near the highest it's been in Rexford's history.
Okay. So still a decent yield, but the main story is growth. Tell me about that. You said it's younger than Realty Income.
Much younger, yeah. It only has about 12 years of dividend increases. Compared to Realty Income's 30 years, it's a shorter track record.
12 years is still pretty good, though.
It is. And here's the kicker. The rate of that dividend growth over the past decade has been huge, like 13% a year on average.
13% growth per year. That's really strong.
It is. Now, more recently, the increases have been more in the, say, 8% range. But even that...
Still double Realty Income's growth rate, roughly.
Exactly. Still about twice the long-term dividend growth rate you might expect from Realty Income. So you see the trade-off, maybe a slightly lower starting yield, but potentially much faster income growth over time.
Okay, so what's Rexford's secret? What do they do differently?
Well, unlike Realty Income's broad diversification, Rexford is very, very specialized.
How specialized?
First, they only own industrial assets. Warehouses, distribution centers, that kind of thing. No retail, no vineyards.
Okay, industrial only. That's a focus.
But the really big specialty, they only invest in one geographic region, Southern California.
Only Southern California. That sounds concentrated.
Yeah.
Is that risky, or is there a reason for it?
That's a great question. And yeah, it's definitely concentrated, but it's very strategic. Southern California is, a massive logistics hub. It's a key trade gateway between Asia and the rest of the United States.
The ports. L.A., Long Beach.
Precisely.
Yeah.
So demand for industrial space there is intense. Plus, it's a really supply-constrained market. There just isn't much land left to build new warehouses.
Okay, so high demand, limited supply.
Which gives Rexford leverage, right? They have pricing power when they set rental rates.
Yeah.
And because they're one of the biggest industrial players in that specific region...
They have an edge.
Yeah, they have an edge when it comes to buying properties, maybe redeveloping older ones, and then charging higher rents because the space is so valuable. So yes, it's concentrated, but it's a focus on a very strong, specific market.
That makes sense. Now, the sources mentioned something about tariffs, like trade tensions causing worry and maybe pushing the stock price down, making the yield go up.
Right, the tariff kerfuffle, as one source put it. Yeah, that's been a factor. Anytime there's uncertainty about trade, especially with Asia, investors get nervous about companies linked to ports and logistics like Rexford. So the stock has fallen a bit, pushing that yield up near historic highs.
So is that a reason to stay away or maybe an opportunity?
Well, it's definitely something to be aware of. Tariffs create noise and uncertainty in the short term. But the perspective in our sources is, look, the global economy is so interconnected today. These trade issues, historically, they tend to get worked out or businesses adapt over time.
Things eventually normalize.
Seems likely, yeah. So for a long-term investor, if you don't mind buying when others are maybe a bit fearful, this dip could actually be an interesting entry point. You get that higher yield on a specialized REIT with strong growth potential.
Interesting. And Rexford's size, compared to Realty Income's $50 billion?
Rexford's much smaller. Its market cap is around $9 billion, and the current share price is about $35.89.
Okay, $9 billion market cap, $35.89 share price. So two very different beasts then.
Definitely. Two different philosophies. You got Realty Income, huge, diversified, safety first, super consistent income, those monthly payments.
The reliable tortoise.
Right. And then Rexford Industrial. Much more specialized, focused only on Southern California industrial, higher dividend growth potential, maybe a bit more cyclical because of that focus.
The focused growth engine.
A good summary. But the key takeaway, stepping back, is that both of these companies, even with their different approaches, they offer really attractive features. Features that should interest long-term investors.
It really just depends on what you, the listener, are looking for, right?
Precisely. Is it maximum current income liability, or is it maximizing that long-term dividend growth?
Yeah.
Your personal goals dictate which might be a better fit.
And what this all boils down to for you listening right now is that even with a relatively small amount like $500, you've got real choices. Compelling options like Realty Income and Rexford Industrial are within reach to sort of kickstart your income investing journey.
It really lowers that barrier to entry. You don't need a fortune to begin.
Exactly. And just think about the long game here. You buy a few shares today, maybe those 8 shares of Realty Income, or perhaps, 13 or 14 shares of Rexford with $500, and then you consistently add to it over time, maybe just reinvesting the dividends automatically. That small $500 start can grow, it can really compound.
Absolutely. That's the power of time and consistent investing.
And eventually it could become a really meaningful long-term income stream to help support you, maybe when you eventually hit retirement.
It's about planting those seeds now.
Right. And look, Wall Street's long history pretty much screams one thing, that the sooner you start, generally, the better off you'll be down the road.